Good afternoon. This is Clark Neighbors with the week ending May 9, 2014 with market update. We're going to spend most of the session today referencing the May supply and demand report that came out at 11 a.m. today. First of all, on the old crop ending stocks, which would be the 2013-2014 crop, corn came in at 1.146 billion bushel. Trade was looking for a little over 1.3, so a fairly positive number. Most, if not all, that increase was due to an increase in export sales from 1.75 million bushels to 1.9 billion bushels. We'll talk on that a little bit. Soybeans 130 carryout. That's a 3.8 stocks to use ratio. For what it's worth, that's the tightest stocks to use ratio we've ever had. Trade was looking for 134, so both old crop numbers and corn and beans were a little positive. Wheat, same scenario, 583. Trade looking for 588. Now the May report also gives us the first indication of the new crop, 2014-2015 supply and demand. And in a nutshell, with carryout, trade was looking for something under 1.7 billion bushels on corn. The number came in at 1.726, so a little larger than what the trade was anticipated. Same noted with soybeans, trade looking for something about 307. The number came in at 330 million bushels. Keep in mind that is the largest carryout we've had on beans in 8 years. More on that in a second. Wheat 540, trade was looking for 553, slightly lower than what the trade was looking for. The main numbers on wheat from a production standpoint, all winter wheat came in just a little over 1.4 billion bushel. Trade was looking for 1468, so a little smaller. And most, if not all, that decrease in winter wheat was due to the hard red winter wheat. Trade came in at USDA came in at 746 with an average trade guess of 782. A lot of that will be determined on weather in the plains over the next few weeks. Now the world numbers is we saw some pressure today, and just to give you an update where we were on the week, July corn for the week is up 8 cents, December corn up a nickel, July soybeans up 15 cents, while November soybeans were up 4.5, wheat up around 7 cents. Now the world production numbers that came out today were a little negative in most cases. Wheat down 2%, year ago 714 million metric ton. This year 697. Corn, absolutely the same production as last year, almost at 979. And wheat up an all-time supply, an all-time supply record on beans of 300 million metric ton. That's up 6% from last year. And that goes into a carryout scenario, or world carryout projections. 187 on the wheat, which is unchanged from a year ago. Corn went all the way to 182 million, and that's part of the reason we saw pressure on the corn market today. The corn market seemed to be focusing on the world carryout on corn because it was quite a bit bigger than what the trade was looking for, and also up 8% from last year. The big increase, not a surprise, soybeans up 22% from a year ago at 82 million metric tons. So the world numbers continue to show pretty good production numbers, and that will be a factor as we move forward. Now again, just some highlights from the report today. Soybean stocks to use, as I mentioned earlier, 3.8% is the tightest on record. But at the same point, the 330 million carryout for the new crop is the largest in 8 years. And keep in mind, since we went to these new price parameters since 2006, 2007, it's going to be interesting as time wears on how the market wants to react to that 330 million carryout number. Now, the argument some traders may try to portray is USDA's main numbers typically the last few years have been a little high, and they decrease as the year goes on. And for reference on that, and a lot of this has to do with production and other factors as the year wears on, the very first S&D a year ago in May for the old crop was right at 2 billion bushels, and here we are on corn, and we're ending up at 1.14. A lot of that increase is due to a slightly smaller than trendline corn yield, along with a big increase in exports and some degree increase in ethanol demand. Beans a year ago right now was projected to be at 265. We're going to about half of that at 130. Now, the other thing to keep in mind, soybeans and this old crop and the strength we continue to see in the front end of this market is the perpetual storylines on importing of beans, cancellations, or letters of credit with Chinese business. We are starting to see vessels show up in the U.S. There's been one or if not two this week. There's going to be more vessels coming, depending on whose numbers you want to use. There are several more vessels on the way. The USDA in the report today talked about 90 million imports of soybeans, which would be an all-time record for here in the U.S. There's been some conversation of beans coming up the Mississippi River to some processors via barge. There was a vessel unloaded or in the process of unloading as we speak in Wilmington, North Carolina to some southeast processors. So bean imports are a big storyline, and that may continue. Now, with 130 million carryout on old crop beans and importing 90 million beans, theoretically we're importing about 70% of the carryout, so kind of an interesting little number to look at. The other thing that's interesting is time has progressed in this crop year is the gradual transformation of increasing corn exports. Looking back at a year ago, the anticipation early in the year, and this is coming off a horrible export year in 2012, 2013 because of the high prices. The anticipation for exports this current year was going to be something a little over 1.25 billion bushels. Here we are today with an increase of 1.9, so it's an increase of 650 million on corn exports just this year alone, and has had a major impact on changing that carryout that a year ago was 2 billion bushels down to a smaller number. So there is a lot of corn, undelivered corn sales on the books. We'll see how, as the summer progresses, if there's any changes on the pace we see on that, but it should be a fairly active export program through the summer months from what we see on paper right now. Going forward, the May report usually is a major transition time frame, and going from old crop to new crop with planning progress where it's at, and I'll touch on that in a second. The progression is going to go more on talking about weather and new crop scenarios, so keep that in mind. Now, planning progress this week has been nothing shy of incredible. It'll be interesting to see what the numbers the USDA puts out on Monday's report. We should be at or ahead of normal pace, considering we've been slightly behind this year. But this week has been very aggressive in planting, especially on corn. And it seems like most areas of the Midwest, as a general rule, have had a very good week of planting, other than parts of northeast Iowa, parts of Minnesota, portions of North Dakota, and a pretty good chunk of Wisconsin. You get out of that area, planting progress is at or near record pace. So in many areas finishing up on corn and transitioning over to beans, or have a fair amount of beans in the ground. So the planting story should be losing some of its luster that has been trying to hang on with this market over the past couple weeks. The other thing, I guess, that pops out to keep in mind as we go down the road is the report today also with the tightness of both the old crop corn and the old crop beans versus bigger stocks on the new crop. That may keep somewhat of a bullish tilt to the spreads, strengthen the front end of both the corn and the beans, either lack of strength or weakness in the new crop. So keep that in mind. A lot of that may have to do with how exports fare on the corn, and maybe to some degree how imports end up panning out on the soybeans. If you have any questions, feel free to give us a call here in the office in Cedar Rapids. Phone number is 800-373-2525. And with that, have a great weekend, and we'll see you next week.